All right, so I want to touch base on a concept that I've covered in the past in reference to liquidity grabs. But this is going to be part of a strategy that I want to show you, in particular when we're talking about supply and demand, and we're waiting for the market to either retrace back to a supply area or a demand area off of a higher base chart. Okay, I'm going to show you this on two folds, on a higher base chart and a lower base chart. But when it comes to the market grabbing or sweeping areas of liquidity at areas of supply and demand where that zone didn't hold up, I'm going to show you what typically happens in reference to if a market takes out a zone that you may have been, waiting patiently for it to tap into. Okay, and most times I'm looking for on a higher base chart a zone to be created, off of an area of supply or demand, which is aggressive area selling and buying. Mark the zone up on the higher base chart and then moving down to a lower base chart and looking for, the strategy to unfold. I talk about the strategy in tons of videos here on this channel, so please spend some time to watch. But let's say the market runs through or breaks through your area of supply or demand, okay? And then it's grabbing areas of liquidity. I'm going to show you typically what happens in the markets, and you have to understand what's going on, because one thing that the market makers, all right, their idea, okay, their goal is to stop traders out. But the bigger goal is to grab areas of liquidity. They want to stop sellers out. They want to stop buyers out on both ends. Okay, so they're creating the traps within the market to stop you out. They know typically where retail traders have their stop losses resting at, and they're going to try their best to run those areas before intending to move in the same direction in which they were already moving in. All right. So, for example, I want to show you, because I know a lot of people who, especially those that will follow the channel here, had this area of supply marked up on the charts. Now, this was a demand zone off the 120 range. I trade range-based charts, but you'll see these type of setups on time-based charts as well, or time frame charts, I should say. Those that trade the, the time based charts, like the 60-minute to 5-minute. I trade range-based, so I like to mark my zone starting with the higher base chart and then scaling down or moving down. But this right here is a demand zone that was created around the London session time, around 3:20 in the morning. And if you're up trading that time in the morning, this would have been a beautiful trade to go long, because you can see what was going on here was that the market from, I believe this was Thursday's trading session right here, it started moving to the downside, okay? And then on Friday, towards around about 11:30, 12 o'clock, we started moving back to the upside right here. But it left this area of demand because we started making these higher highs and higher lows back to the upside, breaking structure, and it left this demand area here, which was untapped, okay? That means there's an imbalance there. It means that there's a gap there that needs to be filled in, and the market came back and tapped that area 3 o'clock this morning during the London session and moved higher because it filled in that void or that gap there or that imbalance and moved higher. So if you were up trading and you saw that setup, then you probably took that trade. If you trade the range-based charts, okay, you're going to see supply and demand on, doesn't matter what charts you trade. I mean, it's going to be on a variety of different charts. It could be tick, volume, range, Renko, whatever you trade, you're going to see this type of stuff. All right, so it's just whatever your preference is. As far as the charts you trade, you got to find out your own little niche. Okay, so let me go ahead and move forward here, because what I want to show you is that let's take a look to see what happened right here, for example, here, okay? And I want to show you what I'm talking about when it comes to liquidity. And then you may, for those that look for or try to trade support and resistance, if you do, this is a combination of where liquidity and support or resistance comes into play together, because the market makers like to grab areas of liquidity and then set up an area of support to which they can basically build a foundation to be able to move higher. Or the same thing if they're looking to grab liquidity on the top end and then build up an area of resistance to push lower. So right here, for example, I was waiting for the market to tap into the zone here at 1050. Well, that's when it happened, okay? That's the 120 range supply zone there. But when I move down to my 24 range chart, for example, right here, all right, there's a zone within that zone, which is there's a 24 range supply zone resting in the 124 range, that larger rectangle box here. That's the 120 range supply zone. Now, there was a small zone right here that was a supply area, but it actually tapped into it around about 1020 today. And so, but you know, I'm marking my higher base zones, then looking to trade once it taps into that zone. So it didn't tap into the higher base zone until right around here, around 1050, 1053. So at that point, I was looking to see was it going to push higher. Now, most times I like to see whether there's a zone that 24R is developed or created within the higher base zone, like right here, but it didn't come up to that zone. So in that case there, then what I'll do is I'll like to see a structure break, you know, to the downside to where it creates a supply zone off the 24R, and then I look for a pullback. So right here where it tapped into the higher base zone, as you can see right here, and then it moved down, okay, and then it came back. So what it did was when it pushed lower, it broke through an area of structure right here below 20,092 or 93 area. But then it created this area of supply right here. All right. So then this is a newly created supply area after the tap of the 120 range zone. So it creates a 24R supply area. And then when it pulled back there, that's the opportunity to go short right there. Okay. Yeah. So it didn't come all the way back up here and test this zone, but it created a newly or fresh supply zone on the 24 range chart after tapping into or hitting the 120 range zone there. Okay. Now, what I want you to pay close attention to is this right here, because what I'm talking about now is to where liquidity is being taken out and then an area of support is being created. They do this type of stuff right here. So let's say, for example, if you were looking to take a trade, say, for example, off the 24 range chart, okay, and you'll see this on no matter what charts you actually trade, okay, it's not going to, you'll see that happen, and when it does, it's really a strong type of setup that you can look to get into a trade. So let's say, for example, right here, the market was making these higher highs and higher lows on the 24 range chart, right? Okay, but on the 120 range chart, as you can see, we're kind of moving sideways. We're actually ranging. We're at a high here, a low here, so we're in between this leg right here. This is a major high, major low, major high here, so it's kind of moving sideways. So be careful within this. But on a lower base chart, okay, lower base 24 range chart, it looks like we're bullish to the upside and we're breaking structure, as you can see here, making these higher highs and higher lows. Then the market turns back around and starts breaking structure back to the downside, okay? So in this case here, maybe you were looking for, right here, let me show you an example, to trade this area of demand right here. Now, just pay attention, you know, as if this price action right here hadn't happened yet. So we're breaking structure on the 24 range to the upside. We had a high, higher low, breaking structure to the upside here. Okay, taking out these areas of these highs right here, pulls back right here, and then it breaks structure again to the upside. And maybe you're looking to find an area of demand to be able to trade. Now, in this case here, we had a new high being created here, had these lows down here, and then we break structure to the upside. I talked about in past videos, the best opportunities come to where the move actually started at. Now, I'm just showing you this as reference on the 24 range chart because you'll see this actually unfold on a high or even higher base charts like 120 range. Again, this is where the market is taking out liquidity and then building up support, all right, to where you can actually look for an opportunity to go long is what I'm trying to say. So the market breaks structure here to the upside. It comes back. Maybe you had this zone right here. Okay, I'm just going to draw it off right quick. This zone right here, okay, created, but it didn't tap into it. A few ticks away. So what it did was it came down there, it didn't tap the zone, pushed up higher, and then eventually came down and took out that box, that demand zone right there. All it did was grab liquidity right here. That's why I have this small little box right here. See, I did this to show you the bottom portion of that swing right there. Okay, it took that out. It grabbed liquidity over here when it pushed up, where it didn't tap into the demand zone here, but broke higher, came back down, took out liquidity right here. Okay, and then pay close attention to what happened once it did that. Once it broke below this low right here, it didn't break these lows. Came down to them, but it didn't break below them. So that's not a liquidity sweep or liquidity grab. It broke below this area here where that demand zone was resting at. When it came right here, it pushed up, okay? Came back, it grabbed more liquidity when it broke below to 20,050 area, but then it pushed up and it created on the move to the upside. Now this becomes support right here, pulls back, and now you have an area of support. So what I'm talking about is you will see nice setups to where the market grabs an area of liquidity and then creates an area of support or resistance. So in this case here, it grabbed liquidity here, all right, came back, creating the area of support right here, came back, tapped into the area of support, and then boom, took off to the upside. And you see what it's doing, okay? I'm going to show you this on a higher base chart too, even 120 range, just to show you that the same things take place where you have a liquidity grab and then a creation of a support foundation being created or a resistance area being created. And you'll see to where they'll grab liquidity, come back to that area, create an area of support, and then move in the intended direction. So after they've grabbed liquidity and created support. So let's just take a look at the 120 range chart, because I just want to show you, even this happens on a higher base charts. You see right here, look what it's doing. Moving to the upside. Again, let me show it to you right quick. Came down. See that wick of this candle right here? Wick right below this candle, these lows right here. Pushed up, came back, grabbed liquidity again. So because they know people are getting to the trade probably right here at the liquidity grab. So maybe you don't want to get in right at the moment of after it creates or takes out liquidity right there. Wait to see if it comes back. In this case here, it grabbed liquidity again. Why? Because it broke below these lows here again. But then when it pushed up right here, okay, it creates support right here, okay? Because you have where it pulled back, pushed up, creating this area of support right here. You can see it right here. Came down, made this wick right here where it took out the lows here, these lows below. Pushed over this candle here. This bullish candle right here created another wick in, so it's creating this area of support right here. Pushed up, and then this candle here came back and tapped into support right there. And then liquidity grab, support being created, blast to the upside. Okay, so let me show you on the 120 range chart what I'm talking about as well. All right, so this was from September the 18th, maybe the 19th, I'm not mistaken, the 18th. Okay, so there is demand area right here because we broke up to the upside, we broke above this area structure, comes back and taps demand. Okay, valid demand setup right there. Okay, so it creates an area of demand right there. Now, after that, look what happens shortly after. The market pushed up and then it comes lower. Okay, it takes out these lows right here. So it took out this low here. It took out this low here. Came lower. The wick of this bullish candle right here. Wick right below this low right here. So what did it do? It grabbed liquidity. Remember what I said. Liquidity sweeps or liquidity grabs, look to see what takes place after that. Okay, are they going to build some area of support or resistance, and to where you may be able to continue taking a trade in the in the direction. So right here, if it's not broken below and closed with the candle to the downside, then maybe they're looking to push higher. So the market came lower here, wicked out below this area here, grab liquidity. Okay, then it pushes up, pulls back. Okay, you see this right here. Right here, it comes back. All right. So now we have this area of support right here. So then you can just wait. You get the break of a candle or close. In this case here, we're kind of moving sideways. So maybe you didn't get in to somewhere over here because the market was kind of just like moving sideways, chopping right here. So maybe you got in like right here at 21, but still see what happens after the liquidity being swept at these lows here. And then a nice area of support was being created. The support area is right here. I'll just draw this right quick. Let's see here. What can I use? I just use an arrow line. This is an area of support being created, right here. This area right here is a beautiful area of support being created right here after the market grab liquidity. So that's something to be mindful on is what I'm trying to say. Now, would I take a trade off of the 120 range chart? If I see liquidity being swept or grabbed and then support being built or formed to go long, it's up to, I'm not going to tell anyone how to trade or what to do with their money when it comes to trading. I'm just telling you, you're going to be able to see setups like this also happen on a variety of different charts as well. To me, I would probably move down to, if I'm trading with small amounts of capital, to a lower base chart, maybe to the 24 range chart. Again, for those that maybe have the capital to be able to look for bigger moves, maybe the 120 range may suit you. But again, you're going to have, you got to look here. If I was getting to a trade and I was just solely doing off the 120 range and I had, big capital money, deep pockets to be able to trade, because you can take a lot of drawdown trading off a higher base chart like this. I'm telling you that right now. You can blow an account real quick if you do not have a decent size of account, even probably trade a prop firm challenge or evaluation or whatever. You can blow an account too if you do not know what you're doing. So this is for someone that's, if you're trading off of 120 range on a setup like this, where you have a liquidity sweep and then support being developed to where the market doesn't want to push lower and then it's rejecting to push higher, then you can take a trade. But you got to understand, you got to have the capital to be able to weather the storm and wait for the trade to play out. Okay, so like right here, the market comes down, it does that area where it grabs a liquidity over here, creates an area of support. I would get into the trade right around 19,605 and a half or 19,606. And then my stop will be resting down here. What did I say? 606. My stop would be, give me 1 second. Let's see. The market breaks above here. Yeah, I mean, if you're trading off a chart like this, your stop's going to be like really back here at 572. So you can see that's a lot of points right there. That's like 30, 40 points right there. So you don't want to kind of weather that storm unless you have the capital to be able to do so off of a, using a higher base chart. A lower base chart, that's what I'm saying. You can scale down and look for setups like that. Again, we want to be taking trades, waiting for the rejection, okay? Just don't jump into it. So again, you could take on a lot of drawdown before the market moves in your, like right here, it did exactly that. I mean, if you take a look here, it actually pushed up here. If you got in here at 606 and came back, look what it did. They came right back to that stop area right there, wicked people out, stopped them out. And that's what I talk about in videos about placing your stop right at the back end of stop loss area. They're gonna stop you out because they know people are putting they know buyers in this case right here are putting their stop right there. So the best thing to do is give yourself some breathing room below here. But I wouldn't be taking a trade off the 120 range chart. I'm just showing you as an example. Setups like this happen even on higher base charts. The thing about it is to look for them to unfold on a lower base chart. Say, for example, like right here on the 24 range chart, the market, again, breaks this area of liquidity, okay, pushes up, creates this area of support right here. I'm going to get into the trade somewhere around 60. If you wait to get into 62, then that's fine, but your stop's going to be back down here at 52. It's going to be like a 10-point stop. It's a big difference of a 30 or 40-point stop versus a 10-point stop. And as you can see, the market went straight up from there. So if you got in here at 62, say for example, you definitely picked up weight. You picked up your 20 points right there before it even came back. So if you got in here at 61 and 3/4 or 62, the market went all the way up, came here, pulled back, and then went up to 83, almost 84 area there. So you could have picked up the 20 points right there. And this is doing it straight off of the 24 range chart without having any kind of really confluence. When it comes to like a supply demand type setup. This is where the market is grabbing or taking out area liquidity and then creating an area of support behind it. So hopefully that kind of makes sense. It doesn't happen all the time. When you do see setups like that, it works out. There's other opportunities that unfold in the market too. If you ever seen to where the market may have taken out an area of liquidity, say for example, and then right below that was an area of demand resting right below that area of liquidity, hits that area of demand and takes off. That's a beautiful setup just as well because it's grabbing funds. They're grabbing liquidity, okay, stopping at an area of demand, and then it rejects that area and takes off. And then reverse, if it's grabbing an area of liquidity on the top side, hits an area of supply, and then is moving back lower. So there's a variety of things and ways to trade. And lots of times, I talk about it in prior videos, is that some of the best setups happen or unfold when the market is actually grabbing liquidity. You got to think about it. It's like a series of events that almost take place. Like they want to be able to do something and then counter or then react after. So just think about it in terms like that. But hopefully this helps you out to understand, because liquidity is a very important piece or concept when it comes to trading. And understand, please be very patient when it comes to, this business. All right. When it comes to actually trading, I can't teach someone how to be patient. I can only talk about it, because patience, again, is going to make the difference of you succeeding or not succeeding in this business. Okay. People always ask me some of the same old questions over and over and over and over. It kills me because they're really not spending time watching the videos. And if they spent time watching the videos, then their answers, their questions would be answered in a sense. Like someone asked me a question about win rate, look, focus on your win rate. That's the key. That's the thing. Because people are so tied to success and profitability in someone else. Focus on yourself. That's the biggest thing you need to do, is control how you're going to trade. All right. If I'm showing you something, if it doesn't work out for you, then move on and find something else that does work for you. Okay. This has been working for me. This is my system, the style of how I trade. I'm just here to share. Okay. So again, I can't bring everyone to the trough and say expect them to drink from the same water, right? It's not going to happen that way. I mean, you're just maybe not going to understand the way or style of how I trade, because maybe one, you learned somewhere else. Now you're confused about how to trade at all. You have to figure things out on your own, okay? I'm going to say this also, that people who actually trade professionally, okay, you have to understand this. Someone's win rate is not the question are going to make up the difference of them, how profitable or successful they're going to be. That has nothing to do with it. Their win rate, okay? Because a person who may have lost 2 trades and takes 1 winning trade and causing their win rate to be lower, they can be a lot more profitable than a person who's taken, say for example, 6 trades, okay, and only lost 1 trade. Why? Because they know how to control their trades in a sense, all right? They know what they're doing, because what I'm trying to say is that person could be scalping real quick, getting in, getting out, getting out, getting in, getting out. And yes, they're having more winning trades, but the profits are as high as someone else that may be looking to hold the position longer, allowing to maximize in profit. So yeah, they took 2 losses, but they executed and they got out the trade early enough. That's the key to it. I talk about this before in tons of videos. Risk management, trade management, understand it, learn it, okay? These are questions that I know people who aren't profitable yet, and I understand that, okay? But you have to understand, just focusing on your win rate. That means be able to control the number of trades that you take. I talk about at the beginning of the year, I said that I'm looking to take 1 or 2 trades going forward. Why? Yes, because it's going to help minimize and control losses, as well as help me preserve the capital as well. So for everyone out there who's just like back to back, is constantly taking trades, 4 and 5 and 6 trades a day, you do it how you want to do it, okay? I mean, eventually you're going to figure out there's a certain recipe to the madness of actually trading. People who actually take their time and who are patient and diligently look for high probability, good setups, they only need to take 1 trade a day, okay? And no more than 2, all right? So now what I'm doing for myself, if a trade doesn't work out and I cut the trade earlier on, say for example, then I'm just going to be done for that day, all right? And maybe I may take 2 trades a day, but really I'm focusing in no more than just 1 trade, on the day. And again, if I take, say for example, here's an example, 5 days out of the week, you take 1 trade a day, okay? If you control your losses, cutting your losses at break even or having a very, very small loss, that means that I've talked about this in videos, once you're into a trade and it starts to come back against you, and you should already know that if you got into the trade late, then don't take or execute the trade, because now all you've done is created a bigger gap for a bigger stop loss, okay? So now you don't have the opportunity to where you need to get out the trade where you need to get out at, so now you're going to start taking on more drawdown. If you get in and execute the trade where you need to get into at, guess what? That's going to define the break-even point to where you can get out of the trade and minimize, I'm talking about minimize your loss, okay, on a trade. So if you take 5 trades a week, 1 per day, okay, and let's say that you had 3 losing trades and 2 winning trades. So I had more losing trades, okay? It doesn't matter if it's a tick or 2 or 3 or 4 or 5, whatever the case is. But then I only had 2 winning trades. But my winning trades outdid the small losses that I made. So you can't focus in on the win rate. Stop doing that. That's ridiculous. Okay. All right. Anybody can tell you that. I mean, yeah. I mean, it sounds sweet when someone says, "Hey, I was 9-1 or 7-3," thinking that I had more winning trades than I did losses. But that doesn't mean that person is more profitable than the next person. Okay. You have to understand that it's about controlling the trade, maximizing the trade, cutting the trade when it's not working out. Trade management, understand that. Okay? There's a lot that people ask questions about. And I know people are jumping from one video or one person to the next, whatever the case is online. Again, whatever I'm sharing, the strategy of how I actually trade, it doesn't work for you. You first and foremost have to do this. Back test it. Okay? People just want to jump in, see something, and either critique or they don't give it a try, meaning they try it for a week and then they say, "Oh, it doesn't work, I'm moving on." You got to back test stuff, all right? And then you have to I'm not just saying for a week, you got to back test months. And then you also have to be in the market's simulation or demo and test it in real time to see if it's going to work, okay? Yeah, you got to put time in. You got to put skin in the game. I'm telling you this because it's not going to happen in 30 days, just like real quick if you don't understand. Some people will grasp it within 30 days. Is it possible? Yes, it is possible. Possible, but you also got to be able to do so and prove to yourself that you can be profitable. Controlling by trade management, understanding your risk that's involved, controlling the trades, knowing when to get out. And I talk about that in tons of videos. If you're in a move or a trade and it's not working out, then get out. If you can get it out at break even, okay, yeah, that's probably going to lower your win rate, whatever the case is, because now the win rates are equated based on how many trades you entered, and how many you won versus how many you lost, or got out of the trade, or whatever the case is, whether it was break even or took a very small couple ticks losing trade, whatever the case is. That's how it is pretty much equated. So again, stop being so tied to win rates because that's honestly is not going to prove much of anything. Okay, because someone can have a high win rate when they're 5-0, but you can have someone who has only one trade and lost 3, but they are more profitable than the person who had a 5-0 week. Why? Simply because of the fact is that they knew how to control their trade, okay, maximize the profits, all right, and those losses they cut them, and they were very small losses. So you have to understand that versus someone who's just scalping real quick for 3-4 points getting out and not making, a lot up each day. Okay. So yeah. And they could be having higher wins with smaller losses, or just, have a higher, week to week, have a higher, win rate, but they're not making or profitable as much as someone that, is really knowing how to control their trades and, practicing proper trade management. So anyways, hopefully you understand what I'm talking about. If not, then I don't know what to tell you. But anyways, I appreciate everyone that continues to watch the videos here on the channel. Thank you for doing so. I just wanted to share with you today, and talk about liquidity because it's a very important part to in understanding the concept of what goes on in these markets. All right, there's a method to the madness. You have to understand that there's no science, because trading to me is more so about an art and a craft. But if you understand what's going on and taking place, then you can get into good setups just as well. So if you're not a current subscriber, please take the time to go ahead and sub by clicking on the sub button down below. I appreciate it. Okay. Also, make sure to turn your post notifications on if you have not done so, to make sure that you also do not miss any other uploads here on the channel. Now, if you're interested in joining the Discord, there's a link down below in which you can join. For all those that are wanting to become the part of the elite membership program, again, because I get plenty of DMs on the daily to those that ask how can they gain access to the private videos. Those are the videos where I break down trade setups so that you grasp and understand. These are trades that I've taken, trades that I posted over in the Discord, where I break them down in detail so that you understand more so about the strategy, my mindset of what I was thinking about into that trade, or even before I took that trade, and where to take profit at, where to place your stop loss at, things like that. Critical components to that most traders always are asking. How does the strategy actually work? And I go into detail on each one of these setups, okay? And there are tons of those videos that are accessible to those that want to become an elite member. I mean, I thank you for all those that support the channel, because that's what you're doing. When you sign up to become an elite member, you support my efforts as a content creator, and I'm giving something back, okay, in return by doing so. So you get the trade breakdowns, you get the video playlist, and then again, I did a great video on covering market structure for anyone that doesn't understand completely about market structure. It's a great video on there just as well. So if you're interested in becoming a elite member, there is a link right below the Discord link down in the description portion of this video. Scroll down, you'll see it. It says becoming an elite member. Click on that. 2 tiers will pop up. Make sure to choose the second one for $6.99 a month. $6.99 is all it is, and you'll gain access to that full community of private video content, okay? But outside of that, that's all I have today. I appreciate everyone, again, that takes time to watch the videos. If you do not mind, please take the time to go ahead and click on the like button right now. I'd appreciate it. I'll see everyone in the next one. Take care.